If you're a retiree stretching every dollar to pay bills, this news can mean more meals on your table, but only if you know the truth. Is this $6,000 senior bonus really coming, or is it just another political trick? Here's the truth. It's not a check, but it could still mean real savings if you qualify. So what is it, and how can you make sure you are not left out? Most seniors won't hear this from the news, so stick with me to stay ahead. Section 1. What's really behind the headlines? You've probably seen the headlines calling it a $6,000 senior bonus. It sounds straightforward, but the reality, like most things in Washington, is more complicated. The proposal is part of a massive bill to reshape the tax code, and this bonus, it's really a targeted tax break for seniors. For those living on fixed incomes, even modest savings matter, especially with the rising cost of food, housing, and healthcare. But here's the thing. Senior bonus is just a marketing term. Our job today is to move past the headlines and uncover what this really means for your money. Section 2. It's not a check, it's a tax deduction. Let me be clear. You will not receive a $6,000 check in the mail. This isn't a stimulus. It's not a direct deposit. What's actually being proposed is a new tax deduction, and that works very differently. A deduction reduces the amount of income the government can tax. If you're in the 12% tax bracket, a $6,000 deduction might save you about $720. In the 22% bracket, it could save you $1,320. So while it's not a cash payout, it's still money you keep if you qualify. So what is it, and how can you make sure you're not left out? Most seniors won't hear this from the news, so stick with me to stay ahead. Section 3. How this deduction actually works. Right now, seniors already get an extra standard deduction on top of the regular one. This new proposal adds another layer, a $6,000 deduction for individuals 65 and older. Married couples where both are over 65, that's potentially $12,000 in new deductions. Example, a 68-year-old retiree with $50,000 in income could now deduct an extra $6,000. If they're in the 12% tax bracket, that saves them $720, real savings. But not everyone qualifies. Let's talk about who does. Section 4. Who actually qualifies? There are two main requirements, age and income. Age, you must be 65 or older during the tax year. If you're a 62, 63, or 64, even if you're retired, this doesn't apply to you. Income limits. To get the full deduction, single filers must earn $75,000 or less. Married couples must earn $150,000 or less. If you make more than that, the deduction phases out. It's gone entirely at $175,000 single or $250,000 married. But here's a twist. Many low-income seniors won't benefit either. If your taxable income is already reduced to zero, this deduction doesn't lower anything. It's like getting a coupon for free coffee when you don't drink coffee. It sounds nice, but it's useless to you. That's why middle-income seniors, not the wealthiest or the poorest, benefit the most. If this is helping you make sense of the news, hit that like button. It really helps more retirees find the truth without the noise. Section 5. Putting it all together with real-world examples. To make this all crystal clear, let's look at some real-world examples of seniors in different situations. These stories will help you see exactly how the $6,000 deduction could affect someone's tax bill and maybe your own too. Example 1. Helen, the middle-income widow. Helen is 67 years old and has been living on a fixed income since her husband passed away. She receives Social Security and a small pension, bringing her total income to about $40,000 a year. Because she's over 65 and her income is under the $75,000 cutoff, she qualifies for the full $6,000. This means Helen can subtract $6,000 from her taxable income, reducing the amount the government taxes. If Helen falls in the 12% tax bracket, that translates to around $720 saved on her federal taxes. For Helen, that's not just a number. It's the difference between paying for a few extra groceries or skipping a needed home repair. This extra tax break might allow Helen to put a little more away for emergencies or cover unexpected medical expenses without going into debt. For seniors like Helen, middle-income relief like this can help stretch each dollar further in a tight budget. Example 2, David and Sarah, the comfortable couple. David and Sarah are both 70, married, and enjoy a combined income of about $120,000 from Social Security, retirement savings, and some part-time consulting work. Because each spouse is over 65, they can claim the $6,000 deduction for a total of $12,000. This lowers their taxable income significantly. If they're in the 22% tax bracket, their tax savings could be as high as $2,640 for the year. That's a substantial amount they can redirect toward travel, healthcare, or helping family members. David and Sarah's situation shows how this deduction rewards couples who have planned carefully for retirement but still feel the pinch of inflation and rising healthcare costs. This tax relief can help maintain their comfortable lifestyle without dipping into their principal savings. Example 3, Robert, the higher income retiree. Robert is 66 years old and has a higher income, around $80,000 from his retirement accounts and Social Security. While he meets the age requirement, his income is above the $75,000 cutoff for the full deduction, so his benefit is reduced in a phase-out. In Robert's case, the deduction is smaller, meaning he might save only a few $100s in taxes instead of the full $720 or more. It's not as generous as it sounds in the headlines, but it's still something that helps offset some costs. Robert's example highlights how this policy targets middle-income seniors but gradually fades out as incomes rise, which some might argue leaves out upper-middle-class retirees who still face financial challenges. Example 4, Maria, the early retiree. Maria decided to take Social Security early at 62 due to health reasons, and her total income from benefits and part-time work is $30,000. Unfortunately, because she is younger than 65, she does not qualify for this deduction. Even though Maria is retired and watching every penny, this new tax relief won't apply to her situation. This is a tough pill to swallow for early retirees, especially since their expenses may still be high. It's a reminder that while the policy helps many seniors, it's not a one-size-fits-all solution. Example 6, George, the low-income senior. George is 75 and lives on a very modest income of $18,000 from Social Security. Because his taxable income is already near zero, even after standard deductions, the $6,000 deduction doesn't benefit him financially. Think of it like a coupon for free coffee. You already get the coffee for free, so the coupon doesn't add value. George's story shows a surprising flaw. The poorest seniors who might benefit most from extra help often won't get tax savings because they don't owe income tax to begin with. Example 7, Linda, the divorced retiree with part-time income. Linda is 68 and works at a bookstore part-time, earning about $25,000 annually. Combined with her Social Security, her total income is $60,000. Since she's over 65 and under the income threshold, Linda qualifies for the full $6,000. This extra deduction helps lower her tax bill, freeing up money she can save for upcoming dental work and other health expenses. Linda's story represents many active seniors who continue working and balancing fixed and earned income. Example 7, Tom and Emily, seniors with fluctuating income. Tom and Emily are both 70, and their income can vary year to year due to investment dividends and rental properties. Last year, their modified adjusted gross income, or MAGI, was $140,000, comfortably below the $150,000 limit. But this year, it's expected to rise closer to $160,000. This means they'll get a partial deduction this year, but a full deduction next year if their income falls again. This example illustrates how seniors with fluctuating income may see changes in their eligibility year to year adding complexity to planning and tax filing. Wrapping up this section, as you can see, the $6,000 deduction is a helpful tool for many seniors, especially those in the middle income range who still owe federal taxes. But it's not a magic bullet or a one-size-fits-all solution. The benefits depend on your age, your income, and how the numbers shake out on your tax return. Understanding these examples can help you see where you fit in the picture and how to prepare. If you're unsure, it's always a good idea to talk to a tax professional who can look at your unique situation and help you plan accordingly. Section 6. Why this exists. The bigger picture. So why did lawmakers create it this way?
Here's what you need to know. 1. It doesn't eliminate taxes on Social Security, as some had promised. 2. It's a temporary benefit, only for tax years 2025 through 2028. It's a workaround. Direct changes to Social Security are restricted by legislative rules. And politically, it's aimed at middle-class seniors, a powerful voting group. Some critics say it's a trade-off, offering tax relief while cutting other programs seniors rely on. Section 7. What should you do now? So, what should you actually do? 1. Don't rush into decisions yet. The House and Senate are still finalizing the bill. It's not law yet. 2. Check your last tax return. Look at your adjusted gross income. Are you under the $75K or $150K threshold? 3. Know that no special application will be needed. If it passes, it'll likely be included as a new line on your 1040 in the 2025 filing season. 4. Talk to a tax advisor. They'll help you plan ahead and make sure you benefit, if you're eligible. To summarize, this is a deduction, not a check. It's aimed at seniors 65 and older with middle-class incomes. It won't help everyone, especially very low earners or those under 65. It's temporary, so if it applies to you, make the most of it. If you found this breakdown helpful, hit subscribe and tap the bell. Share this video with a friend or family member who needs to know. Here at The Wealthy Elder, we give you the truth, so you can protect your retirement money with confidence. And here's my question to you. If you could change one thing about taxes on Social Security, what would it be? Let me know below. Drop your answer in the comments. I read everyone. Thanks for watching, and I'll see you in the next one.